So what we've seen already is unprecedented, and what we're going to continue to see, I think, is going to be unprecedented. I subscribe to the belief that we're beginning the tiptoeing into the GFC part two.
Well, hello there, my friends. Chris Marcus here with you for Arcadia Economics as we continue on our coverage of the silver world. And fortunately, today I'm joined by one of the top silver experts in the world, James Anderson of SD Bullion. James, I know you're a humble guy, although are you aware that really these days you are one of the top silver experts out there? I mean, I know the years go by quickly, and it's a while you've been doing this, studying the silver market, and great to have you on the show. So, are you aware of your
Chris,
status in the silver world these days?
Chris, I appreciate it. It's very nice of you to say that. Yeah, I don't. I mean, it's been a long time coming. I mean, I've been nerding out on silver since 2006, seven, till today. So, and it's gotten even more really focused in since I started working with SD Bullion. I mean, I found a niche in the company in terms of running the YouTube channel. So, what I try and do there is create bullion updates that are very short and aggregate the most important stuff that's happened the past week or so, and use a lot of charts and data. And so, yeah, I mean, it's a nerd fest. If you come and watch those videos, you might have to press pause or watch it twice because it's pretty condensed, it's pretty dense. But yeah, it's labor of love. Let's say that, Chris.
Well, I hear you, and certainly a fascinating field studying silver is. And I'm curious, what you said 2006, 2007. What was it that got you into silver? Because that was slightly before everything fell apart the last time. What
Yeah.
what what drew you in there back then?
So there's a few things. When I was a little boy and back in the country, my granny and granddaddy's house in Tarboro, North Carolina, they had junk silver in the closet. So that was fun going in and looking at the junk silver. And so I kind of planted the seed. I think traveling after college, I graduated undergrad from Loyola New Orleans, where I had a few of the professors there were Austrian school bend. And so they give you both the Keynesian and the Austrian school at the same time at Loyola New Orleans in the business school. I graduated in 2002, and then I traveled a bunch throughout Central America, and then as well down to Argentina after the 2002 collapse of their one-to-one peg with the U.S. dollar, which blew into 4-to-1. And I took advantage of that arbitrage. I basically would work at golf course in the summer, save all my money, and then I went and lived in Argentina for 7 months just to kind of continue learning Spanish and to get just some experience in different part of the world. And seeing that really changed my life in terms of the way that I thought about how lucky we kind of are in the United States, and how much we take for granted, and how I could kind of see the writing on the wall that we were kind of headed in the wrong route. It's ever since all the crazy wars in the 2000s and what's followed since with the GFC and the brittleness of our financial system. So, and then Ron Paul came about, and that really kind of took me even further and deeper. When Ron Paul came around in 2008, I'd already been looking at silver and buying and investing in it in 2007-ish. But the Ron Paul thing, that experience too, kind of opened my eyes about the political situation in the United States. I mean, that was it was a really important experience in my life. And I got so into it that it was like, I'm spending so much time in this sector, and I'm so interested in it. Why don't I just look? I was living in Los Angeles, and there's a long legacy of gold dealers in Los Angeles who were moving gold coins that were collectible in the 60s. And then when they finally legalized gold, bullion dealers started propping up there as well. And so there's a long legacy of gold and silver dealers in Los Angeles metro area. And so I went online and did some research, and one thing led to another. And next thing you know, I'm working in a house right next to Loyola Marymount with Mike Maloney. He was my boss, essentially. I was working with him and a handful of others. And his book came out the same time in 2008 as the GFC. And it was like the last time Borders, bookstores were still around. And everybody in the Rich Dad Network, the Robert Kiyosaki Network, they were all real estate investors. And the real estate market obviously was melting down. And so a lot of them were running to the Rich Dad book series, and they found, Guide to Investing in Gold and Silver, Mike's first book, the all-time bestseller. And the phone would not stop ringing, Chris. I mean, that's how I cut my teeth in this industry, was the GFC in 2008. And so that experience, really left an imprint on me as to what we were dealing with and how long this can go, and how big this can get. And one thing's led to another. I've been in this industry for a long time, and been with SD Bullion, thankfully, for just over 5 years now, and it's been a great experience. We've grown a lot, and it's good time. I mean, it's been a little bit overwhelming. This month has been a record month in terms of sales volumes. We were talking about it before the interview. 2/3 of the way through March this month, we were already at record volumes in terms of months notional sales. And that was just 2/3 of the way through the month. We had to send out an email today explaining to our customer base that A, we were overwhelmed, B, understaffed. We're trying to hire and aggressively hire and get staffed up even further and build out adequacy, for when this happens again, so we won't have a delay in terms of deliveries to people. So it's essentially admitting the fact that we were not prepared for this, and we this is not acceptable in terms of the delays for shipments to customers' doors, et cetera, et cetera. And so, if people want to go read it, it's on sdbullion.com. It's basically explaining to people that, hey, we're going to do better. That's it. Bottom line.
Yeah, although I mean, I think that's understandable. That I mean, that's been the case with a lot of the bullion dealers. Although perhaps what stood out to me on March 10th, we all woke up to the news of Silicon Valley collapse, which sent a ripple through investors worldwide. There continues to be a massive influx of demand as savvy investors are now valuing counterparties. So, this is something that has really changed the way people are looking at a lot of things. And I guess appreciate everything you shared about your background there, and certainly can associate with the crisis back in 2008, 2007, 2008, 2009. That was eye opener for me, which led me to start reading Peter Schiff, get into this as well. And I wonder where you see things now, where it's all these things have happened. A lot of us, when we saw the response to what happened in 2008, were concerned that there would be another round of that. And as we just saw in the message from SD Bullion, a lot of other people are joining in that. And it seems like, well, maybe it's a little bit vague to say we're there now. I mean, there's different stages of when things happen, but where do you see us at the present moment in the cycle of the grander scheme of things?
So I've always subscribed to the fact that the GFC Part 1 was papered over within, basically infinite rounds of QE ever since, and they're doing whatever they can to kind of keep the system's on fumes essentially, and it's completely brittle. And every time they do something, something else breaks, et cetera, et cetera. And so, we had a nice calm, time frame there where they had zero interest rates as low as they've ever been in 5,000 years. Just unprecedented things like negative interest rate policies over in Europe. I mean, it's just insanity. I mean, just the craziest things if you had said that to someone in 2011 or 12 that this is going to happen, they think you were, you had three heads, right? Like they think you were insane. So what we've seen already is unprecedented, and what we're going to continue to see, I think, is going to be unprecedented. I subscribe to the belief that we're beginning the tiptoeing into the GFC part 2, essentially the second half of what was papered over, the reckoning of all the situation of how brittle the system is. It'll get so acute that at some point, out of the chaos, the powers that be are going to try to emerge with a new system and come up with a new structural system and change the rules of the game, essentially. I mean, the last time we had Bretton Woods in 1944, then essentially the default by the United States in 1971 of that old system. And we went full fiat monetization schemes, and the petrodollar was built in, the early 70s by Kissinger and Volcker and other people at the US Treasury running around and getting, Saudi Arabia to sell us oil, and then they would repump their funds back in the United States and buy our debt, and kind of, the number one export that the United States has had since then has basically been the fiat US dollar and the fiat Federal Reserve note. I mean, there's really nothing that's been so successful the United States has created. It's flooded the entire world. I mean, it is the most dominant fiat currency, and it's not even questionable. I think it's 60% of reserves, roughly. I mean, obviously it's been waning, but it's still a powerful fiat currency. For instance, where I live here in Panama, that's the currency we use. They call it bolivares, but it's still the fiat Fed note. They just have a local name for it. It probably makes them feel good. But the bottom line is it's the fiat Fed note. And when you look at how much power it has, I mean, how much a man will work so hard, full day of hardcore labor here, and all he needs to be middle class is 25 fiat Fed notes. I mean, it's not much money, right? I mean, that's not much in terms of fiat currency, in terms of purchasing power. But that alone here is enough for a dignified middle class life. And so, I mean, to me, these are just little paper units. The value in it is just a lot of it is belief and also the power behind the system. The way that the system works, the way that debt works, the way that the monetary system works. I mean, there is true power there that the United States still has, but it's waning. Obviously, we'll probably get into it today about how crazy it's gotten in terms of breaking through from the alternative media space that we've constantly been talking about this for since the 2008 GFC essentially, and increasingly so. But this past week you had Fox News, you had CNN. I mean, they're starting to pound the drums on what is happening in terms of the changing system, and that is, that's eye opening. I mean, it just has not happened. I mean, I'm looking here right now at Twitter, and I told you this before we got on the call, but we have people, this woman, her name is Genevieve Roach Dector, CFA. She sends out a tweet saying the US dollar is losing its reserve currency status. Here's what you should know. And it's like a thread emoji. And below, Elon Musk replies back, serious issue. US policy has been too heavy handed, making countries want to ditch the dollar. I mean, Elon Musk is dropping bombs like that. You're starting to get in front of, other people who probably aren't even aware that this is, a serious thing, or that this is starting to shake and tremble. So, the narrative game is really important, and the narrative game in terms of, what the powers that be want, if they're going to have that on Fox News and on CNN, there's probably, a larger game afoot that you have to kind of think in terms of why are they beating the drums right now? Why now? Right. I mean, China obviously is running around befriending Saudi Arabia. There's going to start, being major trading partners with Saudi Arabia. I mean, basically the petrodollar is more or less going away, if this continues, this type of trend. You have tons of different countries that want to continue to engage with China. I don't know if you've ever seen, for instance, in early 2000, there's an infographic that shows, the world map and different countries who they trade with, and it's all blue, and almost all of it was blue. The United States was the number one trading partner. Cut to 2020, and now it's all red virtually. I mean, the only blue sections are the ones below us because the Marshall Plan, and we dominate Latin America essentially. But other than that, I mean, Asia is the number one trading partner of virtually everyone in the United States, in the world. So they have a lot of sway, and they're starting to show it. I mean, in terms of what they're doing, in terms of what they literally are saying. I mean, you saw last week when President Xi went over to Russia and they had that little conversation at the end before he got in the taxi to drive away or whatever. And, he said something through his translator that basically says, we haven't had changes like this in the last 100 years, but we're the ones driving it, I mean, that was pre-planned and very obvious. They wanted that word to get around. So yeah, I mean, it's domino after domino, and the banks is just one part of the domino sequence, but I think we're starting it. We're trembling into that.
Yeah, I think that's well said, because in there you mentioned how back in 1971 we have Nixon remove us from the gold backing. And I was thinking about it earlier today, how it took 9 years until we ran into a crisis that was addressed, yet at least from the books that I've read about what happened with silver and gold back then. I mean, I know people say that the Hunt brothers cornered the silver market. I don't know if that's exactly the way I would phrase it. And at the same time, you had gold go up to $850, which they weren't buying. So it seems almost as if things were perhaps on the fringe back then.
Oh yeah.
And but just with the point being that it was like a 9 year span from taking away that gold backing, and things were getting pretty rocky. Obviously, here we are 43 years after that. And I get the arguments people make out there. Certainly, Brent Johnson, and who talks about the milkshake theory, and he says, "Well, yeah, the U.S. has a lot of debt, but so do just about every other country." And I think there's truth to that. Where I think there's a lot of countries and people and leaders that would like to go to something else, but it's almost like, well, what do we do? Yet, like you mentioned, it seems like that's where we see China, Russia, and others, we
No,
may
I
not
mean,
have that replaced.
it
Just
just happened this past year. I mean, in 2022, central banks collectively have bought more gold in net volume than they have before World War II. Unprecedented. I mean, the amount, sheer volume they bought, and beginning in this first quarter in 2023, they've been on that same kind of clip. I mean, just huge, huge amounts of gold. Why do you think the government central banks in net are buying that much gold? They know the system's starting to crumble and they're moving toward the next major structural system, and it's going to require having gold to get a good seat at the table. I mean, that's just kind of, I mean, it's common sense, I believe.
yeah, and I mean, whether we have the full system in place now or not, I mean, it seems like there's a lot of motivated parties working
Yeah.
towards making that the case. So I think you also
Yeah.
mentioned in there how now.
Also, when we confiscated Russia's U.S. debt, I mean, essentially when we basically froze them for what they did, going into Ukraine. I mean, that was basically a shot across the bow to everybody, saying, "Hey, if you cross us, we'll just freeze you out." And you can see the sanctions. Obviously, have you ever seen the sanctions chart recently about the United States? How many sanctions we slapped? I think last year was like 2,500. It's going up a wall. They just unilateral sanction after unilateral sanction. I mean, you don't think the rest of the world is seeing this and thinking, hey, maybe we should diversify a bit? I mean, that's essentially, and Brent Johnson's done a good job of explaining that, hey, when the unipolar empire is starting to lose and wane, they're going to do some outlandish things. So be ready for some outlandish stuff coming.
Yeah, and we have Saudi Arabia now applying to join the BRICS, which I mean it's step by step, day by day, and we'll see how this goes. Well, in terms of silver, I'm curious how you see this playing out. What it takes. Sometimes I wonder, is it going to take getting to the point where there's a failure to deliver on the COMEX and a force majeure? We've seen. I'll pull up the COMEX stockpile here as we are speaking, which is currently at 36 million ounces. Came down, as many people know, quite a bit from the silver squeeze, where had about 150 million ounces, came down to 30, I think got low as 30, 31. Kind of been sitting there for a while now. I've heard some people suggest that that's about as low as it's going to go because the silver that's left is somewhat accounted for and really what is available has been used. Do you think it takes getting to a point where someone shows up asking for their silver, it doesn't get delivered? Obviously, we had the big silver import numbers from India last year, although worth pointing out the blue bars here are the 2023 numbers. So at least in the first 2 months, they've slowed down quite considerably. But is that what this will head to, or what do you think it takes for silver to finally see some acceleration in the price level?
So I think you need to start seeing institutional inflows into first gold, and then eventually you'll see beta bets on silver because they'll see silver as being the gold on steroid essentially. We've seen nothing but mainly net outflows from the major ETFs. And I know a lot of people out there scoff and think that the ETFs don't have to go out there and allocate and buy and gather a lot of silver, but they do, as long as they want to continue to more or less stay reputable. So I believe that's really what you're going to need to start to see on the institutional side. You're going to need to see inflows into the major ETFs. Although when you actually look at just look at all those red bars just tunneling out in the last few years. So you've really not seen enough high net worth inflows into the major ETFs. I was looking the other day, though. I was surprised PSLV how large it's gotten. I'm staking the claim now that I think before this silver bullion mania phase comes and goes, that PSLV will end up having more ounces under its belt than SLV will. And I mean, right now they're less than halfway there. But given enough time and the amount of SLV discrediting that's going to happen, and the amount of if you look, for instance, at palladium in 2016 to 2020 in that run, I mean, all the ETFs, all the unsecured ETFs of palladium more or less got their bullion kind of flew out the back door, essentially. So I would expect the same thing. You'll see similar in a lot of these unsecured silver ETFs, where as the silver price starts rising up, and they're going to have to pull out a lot of the silver bullion that's it's more or less available that they can exchange. They're basically the APs can go out and get silver when they have to put fires out, and I believe that that's going to happen in SLV. You'll start to see the amount of silver ounces that are holding in that ETF start to drain, and that's how PSLV will end up growing and getting larger. I think ultimately before it's all said and done.
Yeah, well, it'll be interesting to see how that goes because we've seen more attention. The banks are talking about gold, and anytime the price of gold gets near $2,000 an ounce, we see a lot more attention come on that. Like you point out, has not happened quite as much on an institutional level in silver yet. Although another thing I wanted to get your opinion on, we've seen the open interest in silver go down quite a bit, possibly as low as back in 2013. Any thoughts on the low open interest that we've seen in silver lately?
Yeah, so that's one thing that you want to see actually before a major bullion bull market run. If you look back at say palladium, for instance, before it ran, the open interest collapsed right before it started running up walls. I mean, palladium ran almost I think 3,000 was its top, running up from below 1,000. So I mean, when you see this open interest drop, that's actually kind of a good sign. What you don't want to see is too much froth, too much open interest, because that allows the more sophisticated investors to get on the short side and create cascading waterfalls whenever they kind of want to program them in and trick them with chart paints, et cetera. So this thing could kind of kick off at any moment. This is not, you can see how open interest kind of fell down as that was going on. And you can see that at exponential peak, almost a 3,500 right there, where it spiked up during the Russian invasion. So, yeah, open interest going down doesn't phase me one iota. It's actually a bullish sign for me.
Do you think that's indication of the banks being reluctant to continue to short silver?
Yeah, I think so. They don't want to be caught short. That's for sure.
Well, certainly seems like we have conditions in place for a lot of these things to happen. And I guess perhaps maybe the last thing to occur would be the official pivot. Did get the quarter point interest rate hike last week. About 50-50, maybe a slight favorite of a pause at the next meeting. James, I'm assuming you're not buying into Janet Yellen's former claim about how we're never going to have another crisis in our lifetimes. It seems like despite the proclamations out of the White House and the Fed and the Treasury that things are happening now. And do you think that will be another driver when we finally do see a rate cut, which is largely priced in for the rest of this year?
Yeah, in order to see rate cuts, so you're going to need to see a massive recession, most likely, because they're going to need to have some excuse. Because right now, supposedly, they're fighting price inflation. And I think they ultimately want to cause a recession to somehow thwart some of this price inflation and to appease some of the constituents throughout the United States. Because the Federal Reserve is a political entity. I don't care what anyone says. They still get appointed by the president. They still get brought into rooms and talked down to, et cetera, et cetera. So they still are very powerful. Don't get me wrong, but they definitely have a political bent to their ideas and thoughts and the way that they talk. So, now they're stuck between a collapsing banking system behind them and massive price inflation that won't go away in front of them. And how are they going to manage that? Good luck.
I mean, we know exactly darn well how they're going to manage that, and we've gotten a glimpse of it over the past couple of weeks already. And curious, what do you see the rest of the year? Do you see this escalating? Do you see things calming down and maybe just like we've seen for various points in the past decade where there's a lot of reason to be concerned, yet sometimes it's like, oh, another month ticks off the calendar and it's business as normal? Or do you think we're really here
Yeah.
with something of a 2008 like nature in
If you remember,
2023?
you remember back to 2008. I mean, the way that kind of, it was like a rolling thing that happened, early 2008, I believe March, you had Lehman Brothers, I believe, was it? Or Bear Stearns. I'm
Bear
sorry.
Stearns in
Bear
March.
Stearns, went down early, and JP Morgan took it over for nickels on the dollar, right? Next to nothing. And then it took a while. I mean, we got through more or less the summer until things really kicked off in August, September, and that's when the stuff really started hitting the wall. And so, yeah, I mean, hold on one sec. This somebody's Skype messaging me. You can get out of there. Sorry about that. Yeah, so basically, yeah, it's not going to all happen at once. It's not like, Silicon Valley kind of that whole episode happened the last few weeks, and now all of a sudden it feels like things have kind of calmed down. But in this brittle environment, in terms of the situation, I mean, if you think about what's going on in terms of what's inside these banks, there's so much opaqueness in terms of the derivative markets, in terms of the GSIBs, the global systematic important banks. All you really need is just something to go wrong in one, and it can set off a sequence of events amongst the others. And I think what you're seeing here is obviously a consolidation of the regional banking system. I think the Federal Reserve really wants to continue to consolidate the banking system, and so what you'll end up seeing is even less choice in terms of banking options, and then eventually, ultimately, they're going to want to create their fiat CBDC system as well, and how that's going to come about, how they're going to use leverage to get people to sign up and use it. Those are all questions to be answered. But the Bank for International Settlements has been working for years now amongst various countries in the world, and not simply just for retail CBDCs. I'm talking about wholesale sovereign countries being able to trade directly without U.S. dollar intermediaries. Essentially, for instance, South Africa, being able to pay bank to bank directly to another bank in Asia without having the USD in between. I mean, that's dollar bearish, right? You're seeing that they've been working on this for a while. Project Dunbar is one that you could look up on YouTube. Project Dunbar, BIS. There's like a 4-minute video about how they've gone through all the testing and sequencing of this new system, and they had, I think, 6 different countries involved, and it kind of shows you how they're going to be, implementing a CBDC wholesale system for direct transaction or direct settlement of accounts. I mean, that's the next system, essentially, I believe. So the Bank for National Settlements has the long view. They've been working on this for a long time. And the question is kind of, what chaos is going to come about before they bring that system on as the new, more palatable system than this U.S. dominated version that's kind of running on fumes.
Well, will certainly be a lot to look forward to. I mean, some days I'm not sure what else to say. Where it's just, it's some heavy stuff out there, and not trying to make light of it. Although maybe
No, it's
trying
heavy.
to take a lighter approach to it, because it is concerning what we see happening there, and it seems like some of these things are.
The other worry, Chris, one other thing I'll throw on there, because we're just going to throw out some of these worries. Regional banks, obviously they went in and kind of paused everything in these regional banks, and they say basically arbitrarily they're going to decide which regional banks are going to get wound down and which ones they're going to say that are kind of important. And so, for instance, Silicon Valley Bank, they came in and froze it and didn't give anyone haircuts like they probably should have gotten. But there's rules set up for the powers that be to arbitrarily decide which bank gets saved and which bank goes away, and gets bought off by another larger bank that can come in and consolidate it and put it into their system, et cetera. So, the global systematic important banks, though, those banks like Credit Suisse, for instance, if that bank had actually failed, that could have set up a real problem in terms of the sequencing of events, in terms of derivative failures, first in line creditors. If anyone understands derivative markets and the way that it works legally, derivative bet winners are first in line creditors ahead of everyone. In terms of when a bank fails, they can come in and scoop up the assets before anyone else can. And good luck to anyone who's unsecured there. I'm not sure how that's going to work. Hopefully, FDIC insured up to 250K, but in Europe, it's I think 100,000 euros, et cetera. So what happens here is a lot of people think, oh, the regional banks is the scary place. So let's go into the banks that are massive because they won't let those fail. But here's the thing: in 2014, in the G20, the United States and 19 other of the biggest economies in the world signed on to intranational law, basically saying that, if a global systematic important bank, there's like 20 of them. The Financial Stability Board, the Bank for International Settlements, every year has a list of them in terms of which ones are the most largest, most intertwined, most important ones. And the top one is JP Morgan. So Citibank is in tier next. I mean, all these banks that people are flooding into, if something really goes wrong in one of those banks, you're an unsecured creditor in one of those banks, and they actually flat out fail, the law says that they're bailed in, essentially. They're not going to bail out. They're not legally allowed to bail them out. What saved Credit Suisse was obviously UBS coming in and buying them for, was it 82 cents a share at the end? I think they offered 25 cents at first and 50 cents. I think when it all got done, said, I think it's 82 cents per stock share. But, that more or less saved the system. But that's just one. I mean, there are like 20 of them out there, and their books are not marked to market, and Lord knows what they're hiding off balance sheet in a lot of these zombie banks, and they've just been festering there ever since the first part of the GFC 2008. And so, yeah, it's something to be concerned about, obviously.
Well, I hear you, and we shall see how it goes. Although I appreciate you laying out a good roadmap. One last question for you before we wrap up here. This one is from our super fan Jake's Custom Parts, and I'm 99.9% sure he's probably watching every one of your videos on Friday. He's been wanting to know about the face value amount on these sovereign coins. And I know you said that you had an answer for Jake on that one. So could you explain to
Sure.
people why there is that face value amount?
It's a low face value typically on virtually every sovereign silver coin, every sovereign gold coin minted by government mints, right? For instance, if you look at a United States silver eagle, it claims that it's worth $1, right? And so, they do this, governments do this because what they don't want is competition with their terrible fiat currencies, right? If you had a high face value on silver coins, you may end up having, pockets of the country going into grocery stores and using those silver eagles to buy things. Who knows? I mean, if you have a high face value on it, then it would be a different story. But if it's only one legal dollar, no one's going to spend a silver eagle anywhere for $1, right? I mean, essentially, a silver eagle is what, 35 retail? I mean, right now. So yeah, it's a little trick, a little legalese that the governments like to use to prop up their fiat currency system and not allow true monies like gold or silver to really compete with them on a head-to-head basis. And this is Ron Paul been banging the desk forever about, hey, why don't you just have a competition? Let's see if your fiat Fed note can hold up. Let's just make gold and silver legal tender and see how it fares. Yeah, that would be interesting, right? In time, that may end up being what we go into. Who knows where this can go? I mean, you
Well,
got
we're
to
seeing a
clap
lot of
for
states
these.
doing that now.
Yeah, that's what I mean. You got to clap for the states and what they've been doing. They've been doing a lot of good work in terms of, putting out some new laws that basically they're not taxing a lot of gold and silver when people are buying them in a lot of these states. And the ability for people to own these free and clear, because essentially they're constitutional monies. And as U.S. citizens, we have the right, I think, to choose, and not have these repressive capital gains taxes and all this nonsense that they use to prop up their failing system. It's just we'll see in time. Maybe that changes even more. But right now, the momentum's on our side.
Well, I hear you, and certainly a good time to at least be aware of the things that are going on out there. And I appreciate everything that you shared here tonight, James. And James, for the people who would like a little bit more, Mr. Anderson, can you let them know the websites to find you?
Sure. So I'm pretty active on Twitter. My Twitter handle is at James Henry and then as well for SD Bullion, I'm pretty much in charge of the YouTube channel. So typically what happens is every Friday at the end of trading day, I do a weekly synopsis, more or less, that's bullion related, but we go into a lot of different things. But it's really bullion focused. A lot of charts and data. Like I said, it's pretty compressed. I don't make a video that's much shorter than 10 minutes, and I don't make videos that are much longer than 20. But we go after it in terms of hard hitting, and it's scripted, so I'm not going to be veering off and long tangents somewhere else. I try and keep it condensed and short and respect people's time so they can watch it 10, 20 minutes, kind of get a feel for what happened this week, so they don't have to be doing what I'm doing every week, every day, and watching what's happening day to day. What I do is I aggregate it down to what I believe is the most important information that they need to know if they're interested in silver and gold, et cetera. So if you like that kind of information, check it out. See if you like the videos and subscribe.
Well, James, I appreciate that. I like your videos. I am a subscriber and enjoy watching them each week, and just appreciate everything that you've done for the silver community over the years. And that's part of SD Bullion, where if people want to buy gold and silver, they can find more about that at sdbullion.com. So, James Anderson, great to have you back on here. Nice to see you as always. And thanks for everything you shared. And look forward to catching up with you again soon, my friend.
Chris, I really, really appreciate coming back on the channel. I'm going to read this before I go to sleep tonight. I'm going to start dreaming about the big silver short that's coming up. An excellent book for anybody who didn't pick up Chris Marcus's incredible book that is on Amazon.com. Make sure you go out and yeah, man, just a privilege to be on here with you, and always fun talking with you, and really appreciate coming on.
So there is today's call with James Anderson of SD Bullion. I hope you enjoyed that one at home and found it helpful. Certainly a wide body of experience that James has, as he's been doing this a long time, was one of the people that I always enjoyed watching and listening to as I was learning more about silver, even before I started doing the show. And obviously talked quite a bit about the factors that have been building and are leading towards where we are now, and certainly what we will see in the future. So thank you, James. Thank you everyone at home for watching. And also thank you to First Majestic, who brought us today's show. Did have some news out from First Majestic and also Sierra Madre, as they finally closed that deal to sell the La Guitarra mine from First Majestic to Sierra Madre. That was a stock transaction for $35 million worth of Sierra Madre shares. That leaves First Majestic holding 69 million shares, which is approximately 48.4% of the company. And that is a deal they agreed to last year and had to go through all of the closing procedures. But deal has been closed now, and just wanted to pass that along. So thanks again for tuning in today. Hope you enjoyed the show, and we'll look forward to seeing you again tomorrow.